2020, baby. Yeah. Got the color, got the put, I can make the money both ways, always. I can buy the whole chain, go away. Got a lot of love and throwing no shit, no games, small change. I just made my own band. Probably trading stats where used to let the snow.
Welcome back, people. Yeah, so as part of my eToro Popular Investor Journey series, I'll be doing these weekly recap to really highlight where the portfolio stands in terms of growth and constituents and the path going forward. So this week was a good one. The portfolio increased by 2.61%. And with this return, we did beat two of our benchmarks. So the first benchmark we beat was the S&P 500, which had a return of 1.17%, and the Dow, which was relatively flat for the week. However, the Nasdaq 100 beat us by a huge margin, so over 1 percentage point compared to our return. So given that we closed positions on Friday, over the weekend, the portfolio is sitting in 70% stocks and 30% or 69% stocks and 31% cash. We will buy new or deploy new positions on Monday with this cash. The positions we closed this week did relatively well. I'd say pretty well. So DXC Technologies returned 25%, SigCorp returned 11%, Google returned 9%, AMD 0%, and we lost some on Siri, so minus 6% on Siri. And given that there was so much uncertainty in the market this month, we did buy the VEX just to hedge against possible problems that might occur during the presidential transition or whatever crazy shit people come up with. So we paid a price of minus 12% with this hedge. So far, we're doing pretty good in January. The portfolio is up 5.42%. And over the life of the portfolio, we're also doing pretty well compared to the benchmarks. So we started trading from 14th of October, and currently the portfolio return sits around 16%, Nasdaq around 11%, S&P around 9%, and Dow around 8%. So we're beating these benchmarks by a reasonably wide margin. So the risk score is still around 5. The average monthly risk score is still 4, which is good. It's the max that keeps increasing. And in terms of followers for this week, we did gain one more follower, so much less than last week, but a positive number is still a positive number. Total current copiers sits around 24, so a very good number. Assets under management is slowly growing, so 22K. And the assets under management is growing in two ways. So new copiers adding new money, old copiers adding new savings, which is always good, and the organic growth from the positive increase in return over time. Our portfolio holdings on the face of it seem very healthy. So of the 15 stocks we hold, only 4 are in the red. So that means 11 are in the green. The highest return now is coming from Pinterest. A bunch of stocks between 4 and 3%. And the worst performer is Lulu Athletic. So I had high hopes for Lululemon, but yeah, you never know with these stocks. So that's the story so far. Doing very great we're doing okay in January, and hopefully we continue. Copies are continuing to grow. Portfolio is also growing. So if you like the series, then hit the subscribe button so that you always stay up to date with what we're doing in the portfolio and how the portfolio is growing over time, and my journey from a blue star hopefully to a black star, and hopefully you'll be a copier. So for you, it'll be much more of a growing portfolio return for retirement. Okay, if you'll enjoy what you watch, hit this, or what do they say, smash that like button. Okay, thanks a lot, guys. I'll be putting out more videos and looking forward to your comments in the comment section.
I told you I'ma do this, don't forget this shit a marathon. You make it move but stay in the same place, or West Peloton. Make 100 off a phone call, now that's a telethon. Benjamin's, Jefferson, YOLO to a ghetto spread. Yeah, you know I've been it there.